Welcome, LifeBlood. This is George G, and the time is right. Welcome to today's guest, strong and powerful Pete Millington. Pete, are you ready to do this?
I am, George.
All right, let's go. Pete is a CFA. He is the founder and chief technology officer of Scientific Financial Systems, Inc. They're an organization working to advance the state of the art of data science, big data, machine learning, and asset management. Pete, tell us a little bit about your personal life, some more about your work, and why you do what you do.
Thank you. Grew up in Texas, studied engineering, did undergrad down in Texas, and came up here to the Boston area to study aerospace engineering, actually, at the time. And after I graduated, I went into the defense industry for a few years. But I was actually doing some work in neural networks and AI at the time. And just started reading more and more about what was going on in finance, particularly the application of AI and that to the finance in the late 80s and early 90s. And it was very fascinating to me. So I ended up kind of doing a career change, moved into finance in the mid 90s. I was hired over at Fidelity Investments as what we call a quant, which we apply kind of algorithms and statistics and data analysis to the markets. There's a great kind of career move. I've really enjoyed that. I was there for 17 years doing kind of that sort of application. Kind of started as an analyst, kind of went into a fund manager. So I ran various strategies using quantitative techniques and became a director of research. So I managed a group of people that were doing this, managing kind of, multiple billions of dollars. Ran a hedge fund for a few years, kind of started this firm, Scientific Financial Systems, about 4 years ago to bring these techniques to the broader industry, as I felt like a lot of these people do things in-house, but it's very time consuming to do that. So wanted to kind of make a contribution to the industry as a whole based on my experiences and bringing these capabilities and making them easier to embrace and let people focus more on creativity aspect of running money.
Excellent. So bringing these technologies to the broader industry, let them focus on the creative parts. So what are these techniques and capabilities?
So generally speaking, there's a lot of data, and it's very time consuming to bring the data together and to sort of apply some analysis. And that's unfortunately takes a lot of the time, whereas really people need to be focusing on developing the algorithms, exploring the data, understanding and hypothesizing about how the markets work, and also thinking about and learning from what the markets are doing. So, it's really a balance, but at the same time, the implementation, the technology can kind of take on a life of its own. But so ultimately you need to find time to interact with the markets and to think about what's driving the markets. So really it's about like applying data science techniques, applying machine learning techniques, but in a creative way where you're bringing your ideas to bear. And the ideas are coming from, your intimate interaction with the markets as a fund manager, living and breathing that on a daily basis, the ups and downs, and thinking about why is my fund going up today or down today, and is there something I missed, and if there is something I missed, how do I capture that, how do I explore with the data to capture and understand the markets better and continually expand kind of your mental model of how the markets work.
That's fascinating. So how many, like when you're saying this, it sort of makes sense, but how many data points are we talking about? Is that even the right question? What
it's one of those things that as information has exploded over the last 15 20 years, it's just become so overwhelming. And one of the trends actually is that quantitative investing has become a very dominant force in the industry. And it makes sense because it's very, very difficult for humans qualitatively to consume all that information and react quickly, right? So people have embraced machine algorithms and that sort of thing to assist. And it's almost as if the firms that don't do that it's hard to compete nowadays. So that's kind of the evolution of it. But with respect to how much data, there's so much data out there. Traditionally it was kind of getting the filings that companies are required, public companies are required to kind of publish their annual and quarterly returns by regulations and across the globe, and you collect that, get the pricing data from the exchanges, you see what the Wall Street analysts are doing. But now there's so many other data sources out there, what we call alternative data, consumer data, like consumer credit card data, which provides a lot of insights as to what's going on, what are consumers doing, give you a heads up. It used to be you'd have to wait till the end of the month and get a government report to say, what's happening with, oil inventories or whatever it is. But nowadays there's so much information, you can actually get it almost in real time. Are people starting to pare back their spending, and what does that mean for certain stocks? You can actually get it, even intraday sometimes. And, that's where a lot of firms have embraced that, to actually give them a leg up. And so, it used to be you'd have to wait for data. Now you can go out and get a lot of data, but with respect to how much data, there's huge amounts of data, petabytes of data nowadays, and people are using these techniques that actually can process and these huge amounts of data. So it's very exciting, all the things that are happening. It's an escalation, of technology at the end of the day.
Yeah, a petabyte. Do people really know what that is, Pete?
Yeah. So it's what is it, 1,000 billion bytes. So it's and that's becoming a lot more commonplace. It used to be, a few decades ago, that was just a crazy thing, but that's becoming so common nowadays. And but firms are investing in a big way in their data, the data infrastructures, and they pay their talent a lot, to cultivate these skills. So there's a huge amount of money being invested, actually.
No, it makes a lot of sense in the world. So I'm trying to understand. So if I'm a financial firm and I'm running a mutual fund, and so we are trying to make good decisions so that we can get great returns for our clients, so that more people invest, I can work with your company, and essentially, if I said, okay, here's the info I really want to be tracking, and you can maybe give me like a dashboard that I can look at.
Exactly. Or, what we also do is we provide the tools to our customers, right? So they can be creative, but we take away all the kind of time consuming, operational stuff, bringing the data together, merging the data, cleaning the data, productionalizing all of that. That is just kind of distractions away from, let's actually build a strategy, right? So what we do is actually provide tools to help people streamline and work more efficiently, so that they can focus their energy on actually implementing, experimenting, and kind of exploring the data. So really, our customers, they still take an active role in designing and learning and implementing. We just give them the tools to do it more efficiently and more quickly. But at the end of the day, we're not doing it for them. We're helping them to focus on where they can add value, and not on all the distracting things that come along with the operational aspects of actually getting all the machinery to work.
Yeah, I think that it makes a ton of sense. Do you think that we're going to get to a point where it will, like, just whatever the term is, where a robot can just do it better than a human being interacting with a robot?
Yeah, it's kind of going to evolve, and I think it's probably going to evolve in a way that it's not kind of a human and machine, and eventually the machines take over. It's going to be kind of this melding and augmented intelligence, or such that the firms and the individuals that kind of embrace that ability to become more competitive through these techniques are going to excel, or dominate their businesses. And so I think it's going to happen in a way that's not kind of the way people originally think of man and machine kind of competing head to head, and somebody's going to come out the winner. We're going to become more melded together with respect to information helping you make better decisions, and then AI helping you to make better decisions. And at some point, where do we fit into the thought process? And it's going to become very nebulous. But yes, I do think that it's already happened, and I think the financial industry has always been an industry that has been on the cutting edge of the application of technology, just because there's so much opportunity in being kind of in the forefront. And so there's always been, I think, early adoption of new technologies in finance. And one of the challenges, or one of the interesting points about the financial industry, is that people are very secretive, because whatever they're doing, they don't want to share with their competitors, and they, don't say it publicly. So it's not always easy to even know where the state of the art is in the financial industry, because there's so much secrecy around what people are doing. But I do believe, there's actually a, very extensive use of AI and machine learning nowadays in investing.
How do you feel about surprises, Peter? How often are you surprised?
In general,
Yes, and then with your work.
it's an interesting question. It happens, right? And I think as an entrepreneur, and I try to cultivate my creative side, but at the same time, if you take on something that's challenging, you need to stay focused, and so finding that balance of actually being, having some sort of determinism to work through things, but to keep an open mind about maybe the way you're going about it is not necessarily the best or the only way, right? And finding that balance, because at some point you can't just think, you have to do, but you don't want to do kind of exclusively with tunnel vision. So, I think, so sometimes we think about, well, what is the industry doing? And, are there other, individuals out there we can learn from? And if you do that too much, you don't actually, move your agenda forward. But if, you do have to stop sometimes. So yeah, I think sometimes I have a conversation with someone and they're like, oh, I didn't think about, that way. So I think it's keeping an open mind, making time to actually speak and learn. And, yes, you are surprised sometimes. It's like, I didn't know this, this capability was already that far developed, or didn't know this individual was doing this. And, so, I think making time to learn and, read and speak with, people to learn from them, I think is, and I do get surprised, and it is a function of how much time I make for that, so it's a great question. So
Yeah, in terms of how much time you make for things,
yeah.
how do you think about prioritization?
Yeah, I think it's at the end of the day, you have to kind of have a sense of what you're trying to accomplish and what's going to be involved, and how much time it's going to take, and make sure that what you're doing is actually going to be worth the effort, right? And that's not always that clear, so you have to think through things and just try to make sure that you're finding the best way to be creative, be yourself, right? Bring kind of your skills to the table, but keep an open mind, right? So I think it's not an easy thing to do, So for example, I'm not always on my phone, on the internet. I try to make time to think through some of the things that I'm doing, because ultimately I think the creative end of things is very important, and I think sometimes that's lost when there's so many distractions going on. There's so much today that's barraging you on a daily basis, and so you have to make time to stay focused, if you can.
In terms of, like, I am a major proponent of doing what you've just described, and I have like a fraction of a petabyte worth of processing power in my brain. So I need to be very judicious with what information I'm letting in and what I'm thinking about, because I only have so much. And so that's a challenge for, I think, all human beings right now. And for your systems and for a financial firm, how do I know whether I need to now be taking into consideration what's happening in Ukraine and how that's going to impact Germany and everything else? How are you thinking about that?
Yeah, I think there's traditional ways to go about it, but I think at the end of the day, the way different dynamics affect the markets it's not always clear. The supply chain, which link through in ways that aren't immediately obvious. I think sometimes in the markets we use some techniques, for example, principal components, which basically show you which influences are affecting which stocks, and you can kind of see patterns as to how a certain event is affecting certain aspects of the market, and how you can capitalize on that and learn from it. It's like, why is the Ukraine event affecting these industries in this way, right? At the end of the day, it's a balancing act between letting the data show you where and how things are being affected, but also making sure you have a theory or a thesis as to how that makes sense to you, and that you'll be willing to invest a certain way. So, I think you have to go beyond just, the classical approaches about, countries and regions, and because now all the industries are interconnected. So there are techniques out there, I guess, to say that you can learn how these linkages, affect themselves. And there are kind of what we call factors that play out that you can exploit and capitalize on, that are not immediately obvious and will show up in the data. And they do relate back to, geopolitical events, right? But not always in the way that you might have traditionally thought, right? So because where the opportunities sometimes are in the more subtle things, right? The obvious kind of traditional things, have and will be, exploited, and the opportunities are mitigated in larger cases. But it's where the more subtle, like secondary and tertiary effects of those things. So, so there is the way that plays out, but there also is a way that, these techniques can look at the data and learn ways to capitalize on those sort of things that are not the traditional way. Right?
Fascinating. That's why there's quantitative and qualitative.
That's right. It's interesting, yeah. And so, which actually is one of the interesting areas that that I've enjoyed working within is the traditional fundamental approach to investing, and the newer technical quantitative approach, and actually finding a way to bring those together. Because ultimately both sides can learn, and when they interact, you can actually come up with something that's more creative. And that's not easy to do that. It's not easy for firms to have the capabilities on both sides, but that's right. But there will be kind of a way to actually bring those together into a better comprehensive view. So.
Yeah. I think it's super interesting, and I'm also super grateful that there are folks like you, Pete, who actually understand and can marshal all of this information and present it to people and show them how to potentially make it usable. What they do with it, I guess that is out of your hands, but that's the idea.
Well, one of the reasons why I ended up going this direction career-wise was, I thought about, like, in academia, when you do a PhD thesis, something like that, very intricate work, you become an expert on a particular space, and sometimes you're looking for a problem to showcase, your idea. And sometimes the showcase you're choosing is not that applicable to many different, use cases or people's kind of lives. And so, a lot of times you have these people making great contributions, but on a problem that is very kind of limited in scope, right? But in the financial domain, if you can be creative, right, and you can work with all these really interesting techniques and, enjoy the creative process, solve a problem that people ultimately will care about, right? If you can do something that is impactful and creative in the financial markets, that is a solution that people are interested in. So that's one of the reasons why I ended up kind of going down this path of the application of technology to the financial markets, because it actually it's a problem that's challenging, and it's really intellectually enjoyable to work with just the talent and the people that are in that space. But if you can bring something to bear, there's so much interest and applicability to actually run with that. right? So that's actually been really enjoyable as far as the career path goes.
Love it. That makes a ton of sense. Well, Pete, people are ready for that difference making tip. What do you have for them?
Well, a couple of things. So one is, as an entrepreneur, I've really enjoyed this path. It's, it's not always easy, but it's very rewarding. So, I would encourage people as they go through their lives, and, I'm in my 50s now. So keep an open mind and look for opportunities to be yourself and find ways to leverage who you are and what you bring, to the world. I think that's one area, with respect to actually investing itself. We actually apply these advanced techniques. If there are people out there that have an interest in that from a career perspective or actually doing it themselves, if you're technically, inclined, you can actually do a lot of these techniques yourself. There's a lot of data sets out there that are readily available. But there's also a lot of financial products out there that leverage what we do. And I would recommend that people, make that part of their portfolio to have some exposure and in their individual investing to these techniques. Some examples might be, there's a technique that came out, fairly recently. It was something called fundamental indexing, where you're running money and you're doing it systematically, but you're actually using fundamental concepts, which is a lot of some of the things that I've done as well. So there are financial products out there like that. I would encourage people to look into and make it part of their investment portfolio. So,
Well, I think that is great stuff. That definitely is. Come on, Pete. Thank you so much for coming on. Where can people learn more about you? How can they engage with you?
Thanks, George. I appreciate the opportunity to speak today. So our firm, Scientific Financial Systems, our website is sifinsys.com. There's a lot of information there that talks about the product and our team, what we're doing in the space. We're happy to speak to anybody that might be interested in looking at our products or learning about what we do. Very excited to have a chance to share that with you today. So thank you so much for your time.
Yeah, it was a pleasure. If you enjoyed this as much as I did, show Pete your appreciation and share today's show with a friend who also appreciates good ideas. Check out what he's working on at sifinsys.com. Is that SCIFINSYS, Pete?
That's right.
Excellent.
Thanks, George. Perfect.
And until next time, keep fighting the good fight because we are all in this together.